Andy, it's good to see you again. Why are they tightening standards so much?
You know, and it's pretty usual behavior. Anytime you see an increase in risk or uncertainty in the market, the first thing that tends to take place is they step back on the amount of risk that they're willing to take on. And one of the easy ways to do that is increasing credit score standards.
Won't they make more money, though, if they put out more mortgages?
Typically, yes, but I think what you see in that JP Morgan announcement is they're shifting those resources from the purchase side over to the refinance side. And when you look at it from a lending perspective, they're dealing with dueling risks right now, right? So from a purchase side, they have a risk of taking on more risk in new homeowners. On the refinance side, they're facing a risk of paying homeowners refinancing out of their portfolio and them losing those revenues. So they're really killing two birds with one stone by reducing the amount of risk they're taking on by also retaining the clients that they have in portfolio.
Interesting. Still, for the rest of the housing market, it's terrible news. And so I wonder if someone's going to step up into that void. After 08-09, we saw, obviously, the non-bank lenders become the biggest part of the market. Can they step up now?
Yeah, and that's exactly right. So if you look at the large banks, they really have been very risk averse ever since the financial crisis. And if you look even back before COVID, the average credit score on purchase loans from those big banks was in the 750 range. So maybe that 700 credit score sounds a little worse than it really is. They really haven't been participating in that lower end of the market in recent years.
So finally on this, do you think that, for the housing market in general, what we're seeing will now put a brake on even the small amount of activity there is or have less of an overall effect?
Yeah, and I think when you're looking at the housing market over the near term, right, I think it's important to take a bifocal view, right? And if you look over the next few months, maybe not as much of an impact. We've already seen a decline in foot traffic out there and folks looking for homes. You're seeing a decline in online home searches. You're seeing a decline in listings out there already. So this may have a marginal impact on near-term housing fundamentals. If you look over the long run, potentially, right? And I think maybe what you're seeing from some of these companies is they're trying to get a better feel for what we see in unemployment in coming weeks, what the risks are down term, and then they can adjust accordingly.
Right. And you guys, yourselves have some kind of alarming numbers where you talk about how many delinquencies we could see on people, on mortgages if we get an unemployment rate at 10%, 2 million delinquencies. We're talking about 30% unemployment potentially, and that's 19% delinquency. So what effect will that have across the industry?
Yeah, that's exactly right. And I think we're starting to see those numbers come in already. If you look at some of the actuals data, and we've started to collect daily data, you're seeing the MBA report some numbers out there as well. They're all pretty well in line. And what we're seeing so far is somewhere in the neighborhood of 1.5 to 2 million homeowners that may have already become delinquent or in need of those forbearance plans is probably a better way to say that. So you're already seeing pretty significant volumes. To put that in historical context, if we compare that to the Great Recession, it took 2 years before we saw 2 million homeowners become delinquent back in 2008. Now we're seeing that level of forbearance volume in a couple of weeks. So some significant run-ups, and I think everybody's kind of waiting to see where unemployment goes from here and where those forbearance and risk numbers go.
Right, exactly, and see if that worsens the problem already of mortgages existing for the people who need them. Andy, it's good to see you. Thanks. We appreciate the info as always.